Now let me show you an interesting trade. It's a trade on EURGPB that we sent on a public Telegram channel, and you can find a link about that in the description below. Now, what's cool about this trade, what makes this trade really interesting is that it highlights how technical analysis and price action are essential tools to complement to fundamental analysis. Now, you know the drill. I say it over and over. It's not just about fundamentals, but it's fundamentals and technicals. And that's exactly why we combine both technicals and fundamentals in our trade. If you follow us, obviously, you know that. So here's the point. Here's where it gets really interesting, because even the most consistent fundamental trends have pullbacks, consolidation, dips, rallies. The market doesn't move in a straight line. You know that. If you trade, you certainly know that. And that's an important thing to know, because sometimes the market will move against your position, but it's just a normal pullback. But often you also have to use that to your advantage to enter the trade at a better timing. Now, a couple of weeks before the EURGPB trade that I've shown earlier, we sent another similar trade idea, still was on EURGPB, that highlighted the overall fundamental context. Now, that trade pretty much chopped around for quite a while, slowly grinding towards the stop loss, then bouncing back towards the stop loss, bouncing back, just a choppy trade overall. There was nothing going on there. And, sometimes you catch the right entry at the perfect time, sometimes you nail the entry, but often, sometimes you just get a little too early, and that entry clearly was a bit early. Then we got another technical confirmation, which led us to a second trade in the same direction. Now, usually we don't add to position, we don't take multiple trades in the same direction, because, we just don't like to add to positions that are not really doing what we wanted to do. But in this case, that technical setup was really there, the fundamental context was sort of there, and we took that essentially as an isolated trade. And after that, in a couple of days, the trade pretty much went to full target and some more. Now, I want to be precise, that big impulsive bullish move that you see on the chart was actually thanks to some very dovish comments from the Bank of England. Now, you know how it works. Talks about rate cuts are what we call dovish, and talks about rate hikes are what we call hawkish. And specifically, dovish is bearish for the domestic currency. Now, in this case, the Bank of England started to talk about how inflation was doing very well, how they expected more disinflation, and now all that was bringing them to pretty much a rate cut. Now, that's dovish. Okay, but what's the point? Well, the point is that technical analysis is useful, but it's even more useful when you pair it in the fundamental direction. And fundamentals are useful, but they're more useful when you pair it with technical syndications. Now, that EURGPB trade is an example of it. It chopped around for weeks doing nothing until it printed a solid bullish engulfing on the daily chart. And it did so, and here's where it gets really interesting, it did so right before the right fundamental catalyst that pushed it straight to target. Now, you're going to start thinking, well, so price action leads fundamental analysis. Price action leads fundamentals. Well, that's not really the exact right way to put it, and that's not also the point. Sometimes the market will expect a specific scenario, a specific fundamental scenario, and so as a result, it will form a price action leading that scenario that then follows through. And that's fascinating, Sometimes the market really sees a specific event unfolding before it actually unfolds. And that's why technicals and fundamentals complement each other so beautifully. In other words, you get fundamentals for direction and context, and technicals for timing the entry. That's the way, and that's the way we do it. And we do it consistently. Now, how do we look at technicals exactly? Because we look at any particular setup, indicator, price action. Well, I see technicals very simply. It's higher time frame price action and lower time frame market structure. Now, in fact, if you follow us, you will see those two mentioned multiple times on our trades in our public Telegram channel. Specifically, things like engulfing candles on a daily chart and trend lines on lower time frames. Now, I do have very strict parameters to define an engulfing candle. Parameters which I think, at least from what I've seen around, are a bit different from others. Basically, I define an engulfing candle only when it does this. It takes out the low of the previous candle, or the high of the previous candle in case of bearish engulfing, and then it closes above on the other side. Now, the reason why I like this specific definition is that it fits with what I also like to see on the lower time frame, which is this. Basically a fake out of the low or high, so a break and quick rejection of the level, followed then by a break of market structure in the opposite direction. Now, if you think about it, that's essentially the inside of a daily engulfing candle most of the time, right? Yes. So you also can see that exactly going on the Euro GBP trade earlier. A fake out of support followed by a breaking market structure, which on a daily time frame looks like a bullish engulfing. And that's a very simplistic way to look at technical confirmation, but a very effective way to do so. Now, obviously, this is just one specific setup, but one often is enough to trade consistently. And when you align your technical setups with the fundamental direction, you can get some really good trades for real.